Investors and traders, welcome to the channel. Today we'll be taking a look at the key US stock indices, and we will also take a look at the US bond futures, US Treasury bond futures. So this video is for educational purposes only, and it is not a financial advice. What we are looking at is the daily chart of the long bond. So this is D bond futures. So this is 30-year duration Treasury bond futures chart. So here, the reason for me to bring this in our analysis is that the bond market is much bigger than the stock market, and of course we have the credit market as well, which is even bigger. It's got other stuff such as credit default swaps, mortgage-backed securities, many things. We'll focus on the listed securities. Okay, so what I want to bring to the attention is that since the 3rd of March, we have seen a really pretty big move in this market, and it's a big market. Um, and right off the 61.8% Fibonacci retracement, and over the last few days, since the beginning of the week, the issue which we have seen with the Silicon Valley Bank, a few other banking institution, and the stress coming into the financial systems, apparently there has been a lot of buying in this market. Perhaps investors are looking to move into the safety of the uh, long duration bonds backed by the treasury. And over this period, what we have also seen is a decline in the stock market over the last few days. Obviously, the stock market has been stabilizing, and what happened today is what I want to bring the attention to. So this candle which we see is the 16th of March, and here what happened is, look, there has been a pretty big sell-off. So let me actually show you here. So it's like or a couple of points, um, about 3 points in the bond market, and that's quite a lot actually. Obviously, it's not comparable to the moves which we have seen here going up. But what is important is that we have seen a rally in the stock market. So it appears that the money which actually went into the bonds, safety of the bonds, actually some of it perhaps came out and went into the stocks again. And we'll be taking a look at the broader stock market. What I also want to bring to the attention is that the rally which we have seen is equal to the rally which we had seen before in July of 2022. And this brown line which we see, you can see that the market is not able to get above this, so it is a strong resistance at this point. What it means is that if bonds begins to sell off, this means that the interest rates will be rising, and which could have some problems for risky assets. So this is what I wanted to bring to the attention, and we'll be watching the bond market really carefully while we are here. Let's also take a look at the 10-year bond futures. This is the 10-year note, treasury note, and this market is actually bigger than the long bond market. And here what we see is in the blue line that the rally which we have seen did not really get to the same magnitude as the one which we had seen back in June of 2022, and then there was a sharp sell-off. And similarly to the long bond, we have seen a good move in this market, and today a quite a significant sell-off. And right at the top is obviously the old high, so this could probably be a double top formation if the market moves lower from here. So let's take a look at the stock market indices and what we are looking at. So guys, here if you recall the video which I had done before, in that we were looking for a pattern formation highlighted in this purple ABCD pattern, and we were looking for the market to get down to about 38.42 and a quarter, and the market pretty much went there. Maybe it went lower by a point or something like that. So this ABCD pattern did get completed, and just below that we had the 61.8% Fibonacci retracement. So it was a good pattern formation in terms of confluence of levels coming together as a probably a good support level, and this is certainly what we have seen over the last few days. The market seems to be accumulating from here and moving higher, and today, as I just showed you, there was a sell-off in the bond market, and the equity markets gone up. One more thing which I'm going to do is I am actually going to delete this longer term ABCD which I had. We will be watching for further clues for this market, whether it could in fact reach there. The reason is that based on some timing aspects I was looking at, which I'm not going to cover in the video, um, we are getting a little bit closer to that time period, and basically what is going on in the financial world. Based on that, further um, further levels need to be watched um, before we can say that okay, that the cycle I was looking at is still active. So this is what we are looking at in terms of the S&P 500. So one thing I want to bring to the attention is this, that the rally which we have seen just today, uh, so this was the last rally which started on the 2nd of March. If we just clone that and we use it as sort of a market symmetry formation, and here you go guys, we are right at this symmetric level. So what it means is that if we get a stronger day and this symmetry, which could be perhaps a start of a bearish symmetry, if this level is blown out to the upside, then this is a good indication that this bearish symmetry scenario might not be in play, and the market is looking to move higher. Whereas if we begin to see weakness come into the market over the next couple of trading days, so tomorrow is a Friday, which could mean that this bearish symmetry scenario might be in play, and we could be looking at perhaps further lower prices. So what are we watching for in terms of certain price levels? So let's just draw some retracements to get some resistance level. So there we go. So this is the 38.2% retracement of the entire low from there. And obviously the market is a little bit higher, but we also have this bearish symmetry potentially here, and then just taking it from this level here. Um, the 61.8, yeah, so there are a number of things coming together here. So anywhere between for tomorrow, from the current levels to about 40.20, 40.30 is the kind of possible zone to watch in terms of resistance. So let me just write that, resistance zone. Okay, so this is what we will be watching. All right, so let's take a look at the Russell. So guys, the Russell has been a really weak index. So in the current market, we have to analyze all the indices because the market seems to be bifurcated, and I'll just mention that what I mean by that. So again, here what we were looking for was this ABCD formation, but the index was so weak because it has got small cap in it. It went right to the 78.6% Fibonacci retracement, challenging or taking out the lows of back in December of 2022. And here again, what we'll take a look at is this uh, symmetry. Oops. I accidentally moved this. There we go, put it back. And like S&P, we are just there. So next couple of trading days really key to watch. Let's see where we have the 382, and we also have the 382 here. So 1807 level is key level to watch. So I'm just gonna draw this as a area to watch. This one, NQs. Let's take a look at this one. Wow, guys. So if you look at the S&P 500, then you look at the Russell 2000, and then you look at the Nasdaq 100, a very different kind of a picture. This is what I mean by the market is bifurcated. It seems to be so much stronger. So I am going to remove this ABCD formation because this pattern did not pan out. And what we can see is that we were looking for this 38.2% Fibonacci retracement of the lows of October 2022 and the 61.8% retracement of this. Um, this zone has also formed a double bottom formation here. So this one and this one. Let me just draw this here. So that's an interesting one. And it looks like this market is going to go and challenge the highs right here of the 1st of February. If the move is strong enough, perhaps it could go all the way up to 13,270, the 75. That's the level which we had been watching for. However, guys, we have to really look at what will happen over the next couple of trading days. And in terms of, it's also approaching this levels which could be pretty you know uh, res- good resistance level around here. So this kind of zone might also be a resistance. So the move perhaps could also fail here, or just get into this zone, try to take some stops above here. There is like a potential gap kind of formation here in terms of double top with this one. Let me try drawing it here just to illustrate this point here. So this and this, those could be the areas the market would be targeting. Then let's take a look at Dow Jones. So Dow Jones retraced 50%, came out of this trading zone, excuse me, this trading range, and perhaps it might just get back into it. If we just draw a Fibonacci retracement, the 38.2 comes around 32,781. We'll round it off to 800. So it looks like it might just get there. And then obviously we have the 61.8%, around 33,500 or 33,450. So guys, this is what we are watching. Apologies, the video is getting a little bit long. So I'll just cut it here. If you like the way we look at the markets, do the analysis, please do subscribe to the channel, and also like the video. It just encourages me that people like the videos from educational perspective, and it just encourages me to keep on producing more videos for educational purposes. So thank you very much. Good luck and good trading.